let's start it off with the basic question. What is a reverse mortgage?
Great question. So bottom line, a reverse mortgage is for somebody who is 62 years or older and wants to access the equity in their home that they can't through a traditional mortgage. Okay. Eliminates the mortgage payment. Allows you to live in the home.
Wow. Okay. Now that sometimes it sounds too good to be true, but it might not necessarily be, right? How does you said 62, they have to be 62 or higher. What are some of the other qualifications that a person would need to have in order to qualify for a reverse mortgage?
Sure.
Yeah.
Well, during the application process, we evaluate assets and income. Okay. So you want to make sure that you're able to pay the property taxes and homeowners insurance. While you're in the property. Okay.
Yep.
And then secondly, you need to qualify based on an residual income factor. So that's after all fixed expenses are paid, you need to have a certain amount of income left over.
Gotcha. Hey, what's going on, everyone? It's Tim here with the TMA Connection. It's your local podcast that focuses on the lives of people that are making a difference in the lives of others. And we also talk about community as well as real estate. And today we're jumping into the real estate corner because we have an awesome guest. I've been really looking forward to this one. Mr. George Denikos. He is with Allied First Bank. He's been in the industry for 24 years. At Allied First Bank. I can't say that right, you know. Allied First Bank for 3.5 years. And today we're going to be discussing reverse mortgages. We're also going to be discussing what they are, who benefits from them, and maybe some misconceptions that we might have about them, and also just kind of give you like a real life scenario of what a reverse mortgage has done for one of your past clients. So George Denikos, welcome to the podcast, my friend.
Thank you, Tim. I appreciate it, man. Yeah. Appreciate the invite being here.
Yeah, this is cool. Before we jump into reverse mortgages, let's give everybody a little bit of background about who you are.
Okay. Well, first of all, I have been in the mortgage industry for 24 years. But that's not all I'm about, right?
Okay, cool.
I also partake in coaching my son with his baseball.
Nice.
I love it. He just started 7-8. We did 4-6. Now he's doing 7-8. Just put on the catcher's gear for the first time and pitched for his first time this fall season.
Oh, wow.
So that was a lot of fun.
Yeah? Yep. Did he like it?
Oh, man, he loved it.
Oh, wow.
Yeah, the kids loved it. We had a blast.
That's awesome.
Yep.
That's awesome.
Yeah. And then my daughter, she plays 14UB travel softball. And before that, a lot of people don't know this, but she was a ninja warrior.
Get out of here.
Yeah.
Like on TV? On TV?
Yep. But she did it on the National Ninja League. It was a circuit where she competed at a national level. There's a local gym here. Kinetic Ninja Warrior.
Awesome.
She did that for 3 years, and she made it to the World Finals every year, 3 years in a row. And she was rated in the top, I want to say 20 kids in her age group every time.
So if I give you a piece of paper, will you be able to go get her autograph from me? That is stellar. That's awesome. That's awesome. Cool. And you're married?
And I'm married. Married going on 18 years.
18 years.
Yes.
All right.
Michelle Denikos.
Michelle Denikos.
Yeah. I'm one very lucky man.
Yeah, well, I only know a very limited side of you because we're usually in the gym with each other in the mornings. And but outside of that, man, I didn't know any of this. So that's pretty cool, man. That's pretty cool. So you've been in the mortgage industry, and you do have a very fine niche with reverse mortgages. You do other ones as well, but
absolutely,
you do have a good specialty in reverse mortgages. So I want to talk about that today. Let's start it off with the basic question: what is a reverse mortgage?
Great question. So bottom line, a reverse mortgage is for somebody who is 62 years or older and wants to access the equity in their home that they can't through a traditional mortgage. Eliminates the mortgage payment. Allows you to live in the home.
Wow. Okay. Now that sometimes it sounds too good to be true, but it might not necessarily be, right? How does you said 62, they have to be 62 or higher. What are some of the other qualifications that a person would need to have in order to qualify for a reverse mortgage.
Sure.
Yeah.
Well, during the application process, we evaluate assets and income. Okay. So you want to make sure that you're able to pay the property taxes and the homeowner's insurance.
Okay.
While you're in the property.
Okay.
Okay.
Yep.
And then secondly, you need to qualify based on an residual income factor.
Okay.
So that's after all fixed expenses are paid, you need to have a certain amount of income left over.
Gotcha. And so we're talking about Social Security.
Social Security, pension.
Okay.
Even if you're working, right? You can still work. And a lot of people, there's another misconception is
okay,
you have to be retired to qualify.
Oh, okay. And you don't have to
That's not true. You don't have to be retired to qualify for a reverse mortgage.
Interesting.
Yeah.
Okay. All right. So what are the different ways that people can receive their proceeds, or what are some people's goals when they're seeking out a reverse mortgage? Like what are the benefits that they're gaining from getting a reverse mortgage?
So typically clients are looking to supplement their income.
Okay.
Or take care of expenses that they can't pay for now.
Right?
Okay.
Okay.
So unforeseen medical expenses, financial situations, things that come up, even maintenance on the house.
Okay.
Right. That they just can't pay for because they're getting Social Security or pension.
Right.
Right. And they maybe they do have a 401k. Maybe they do have assets. But you don't want to take assets like that because they're long term. Right.
Right.
You want to take them out of your account. So if you have equity in your home, you can access the equity and take care of those expenses.
That's an interesting thought, because a lot of times people are sitting on their greatest asset, living in their greatest asset,
and they're not using it.
But they're not using it. So you can use the equity in your home as an investment that can pay you now versus
when you sell it.
Or
when you die.
Wow.
And then the money goes to your kids.
Right.
Right.
Interesting. Okay, and we're definitely going to get into how that affects families when they, how it affects the selling process when you get to that point, whether if somebody passes away or they just naturally want to, move to another, location, or move into assisted living, or whatever the scenario may be. As a person continues to age, how does that correspond with the reverse mortgage?
So the older you are, the more you can borrow.
Okay.
Okay. So there's a formula calculation that FHA uses.
Okay.
It's blanket across the board. It's not different with any different service or investor. It's an FHA guideline. It's called the principal limit factor.
Okay.
Okay. So the PLFs are the loan amount of which you qualify for based on your age and the value of the home.
So you qualify for more the older you are.
Yes.
Okay.
Because the life expectancy is less.
Okay. Okay. Interesting. All right. And then a lot of people might have this misconception too that, oh my gosh, what if the market crashes, and what people fail to realize too is that what happened in 2008 is less likely to happen right now in today's age, right? Because
correct.
There was a lot of different factors that were going on. Not as much was regulated back then. So we're not going to. I don't think we're going to see a market crash unless there's something that's something crazy that happens in the world that we just don't know about yet. We don't have a crystal ball. But people that fear of the market crashing, what kind of what would you say to them if they were concerned about getting into a reverse mortgage?
Well, first off, a reverse mortgage is just like any other mortgage, except you can just access the equity now versus later, right?
Okay.
So it's just like a standard mortgage.
Right.
Secondly, it's an FHA insured loan.
Okay.
So you're paying the FHA upfront mortgage insurance.
All right.
And then you have the annual MIP.
Okay.
All right. That insurance insures the loan. So let's say, hypothetically, you get a house, okay, and it's valued at $500,000.
Okay.
Right? And the reverse mortgage is based on that value.
Alrighty.
Like you're saying, this unforeseen catastrophic event happens financially and it collapses, right? Now it's worth $250,000.
Okay.
You're not responsible for that $250,000.
Interesting.
Because it's insured.
Because it's insured by the Federal Housing Administration.
Absolutely. And there's another good point to be made here in that situation is if you qualified for a line of credit at that time. Okay. That line of credit, let's say it was $100,000 at the time that you opened the loan. Okay. 10 years later, that same line of credit has a growth rate. It could now be $200,000. Even if the market crashes, that line of credit is insulated against any market deterioration.
Wow.
You can't say that about any investment.
Can't say that about the stock market, 401k. Nothing like that.
Nothing like that.
So that money is secured.
Yes.
The home equity that's increasing with over time.
Absolutely.
Is secured.
Yes.
It sounds like a pretty good retirement plan right there. You know,
it's great for long term
planning. Wow. Okay. So, what other misconceptions might I be, or hesitations that people have? I mean, you talk to plenty of people about these all the time.
Sure.
What are some of the frequently misconceived notions that people are attaching to reverse mortgages?
Sure. Well, all the time, I'm always doing conference calls with borrowers, their kids, because their kids are concerned the bank is going to take the house.
Okay.
Okay. So I'm always doing a conference call. It might be with the kids. It could be with a financial advisor. It could be with a CPA.
Okay.
Whoever it may be, I'm handling that conference call.
Yeah.
Right? And I'm explaining to them that does not happen.
Interesting.
No one's taken the house. It is paid off just like any other loan. Okay. So at the time of the sale of the property, whatever the payoff amount is,
right,
minus the transactional costs.
Right, because you have transfer taxes, recordation fees,
right,
realtor commission fees.
All of that.
Okay.
Right? Whatever the difference is the equity.
Okay.
That is dispersed amongst the heirs. Period. Okay. Now let's say the husband's qualified for the loan.
All right.
The wife is a non-borrowing spouse.
Okay. Yep. Okay. That happens a lot.
Yep. The husband gets put in a retirement home.
Okay.
Because he has Alzheimer's. Something happened.
Sure.
Right?
Yep.
Okay. She can stay in the house.
Interesting.
They don't lose anything. She stays there until she dies.
Okay.
Once she passes, the heirs, same thing, whatever the payoff is, or they have up to a year to decide if they want to pay off that loan themselves and qualify and keep the house.
Okay. So again, the bank does not take ownership of the house.
Absolutely not.
Probably similar to a regular, bank loan setup where they put a lien. The first lien is the bank.
Yes.
Right.
Same.
But you have ownership and title to 100%. The home. Cool.
Yep.
Wow. Any other misconceptions I'm missing? Or
those are the biggest ones.
Those are the biggest ones.
Yeah.
Okay.
That usually come up.
Yeah, I think because a lot of times people fear getting into something that they don't understand.
Absolutely.
I mean, look, I know nothing about cars. And when I go to the car, to the car mechanic, and they say that I need this, and this done, I'm relying on that they're trustworthy and that they're actually telling me what I actually need, right?
Yes.
And that's all based off a reputation of, hey, we recommend these people. Hey, don't go to that person, because I don't know anything about it, and so maybe I'm a little bit more hesitant to jump into something when I don't have the knowledge about that. So, I think it's important that everybody's situation is different, and whether you qualify for this or you can't qualify for it, that you're going to be able to say it up front, like, look, because of this, or this, you don't qualify, but maybe for this, and this is a really good avenue for you to pursue.
Absolutely. And you have to evaluate every client's financial situation.
Yeah.
So we thoroughly look at assets, income, expenses, equity position. We analyze all of that, and we see if this is truly the best option.
Yeah.
And usually 9 times out of 10, it is.
Okay.
33 million people right now qualify for this mortgage.
Wow.
In the country today. 33 million.
And that sounds like a big number, but
it's a big number, but it's a small percentage that
of people
understand it and take advantage of it.
Wow. Now, we're kind of gearing this towards the refinancing part of, you already have a home, you have equity in your home, and this might be something that you can qualify for. Can you purchase a home?
Absolutely.
Really?
You can do a reverse purchase, yes.
A reverse purchase. Tell me a little bit more about that, because again, those are the people that, I'm serving, and maybe that's an option that I can kind of help guide them towards.
So I'm gonna walk you through an example of a client I just spoke to in Utah.
Okay.
And this was a call I had last week.
Okay.
All right. So she's in her home. She doesn't want to lose the home. She's going through a divorce. Okay. She wants to refinance the house because she doesn't want to lose the house. But she cannot afford the payment because she's getting a divorce. Okay. She's losing her husband's income.
Right.
So she wants a reverse mortgage.
Okay.
So I evaluate her situation. She cannot qualify for a reverse mortgage because the equity position isn't great enough.
Okay.
Okay.
Yep.
You have to have equity in the home.
Gotcha.
Right? You don't want to. You're not allowed to use all the equity just to qualify for a loan because that'll put you in a bad position.
Okay.
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 In her specific situation, it's better for her to sell the house.
All right.
Find a new home. Use that money as a reverse purchase, so she satisfies her concern about paying a mortgage payment. Right?
Yeah.
So as long as she finds a house within that range,
Sure.
right, where she can put 60% down,
Okay.
whatever the principal limit factor is based on her age and the purchase price.
Right.
Right? And let's say as an example, if the principal limit's $500,000, right? And the purchase price is $600,000,
Okay.
she needs to come to the table with $100,000
Gotcha.
plus closing costs.
Okay.
So if the equity in her home is $400,000, she has the money to do it.
Sure.
And in her specific situation, it makes sense.
Right.
So I'm in the process now of talking with a realtor in Utah, trying to find a property for her that she can purchase while she lists her current house.
That is amazing. It's just amazing that, you know, when you think that there's no other option, there actually is.
There is.
There
People
is.
just don't know.
Wow.
They just don't know.
That's why you're here, George.
Yeah. I hope I can help somebody.
There you go. Right. So we talked about if there's being a deficit in the equity of the home versus how much is owed at the end. FHA is ensuring that.
Yes.
Let's talk a little bit about how it affects the heirs of the people. Like, are there any concerns or things that they need to look for in the future when mom or dad who have since passed have a reverse mortgage? Are there any concerns that they need to be concerned with?
Just be aware of the monthly balance accrual rate. So every month your parents will receive a monthly statement. If you're in a reverse mortgage, it lets you know what the balance is accrued to.
Okay.
So it's the current total loan balance and the principal limit.
Gotcha.
So every month they'll get that statement. And
Right.
they'll see how much it's going up.
Yeah.
The average appreciation in the country, right, for housing over the last 30 years is 4%. So when you look at it that way, if you have average appreciation of 4% every year annually, your balance will accrue at the rate, right, of interest deferral,
Okay.
plus whatever else you're going to pull out if you have a line of credit available. And not everybody does.
Right.
But if you do, whatever you pull out of your line of credit, that also goes towards the balance.
Gotcha.
So just be aware of it.
Okay.
You know?
All right.
Know what the value is.
Now let's okay. So we did one scenario, right? With you have a really good example that you had sent me in preparation of doing this podcast, just to kind of wrap my head around what we're going to be talking about today.
Yes. So this particular example was a referral from a financial advisor in my network.
Okay.
His client, longtime client of him, he's an Edward Jones financial advisor.
Okay.
They were in a situation where they were depleting their 401k, their IRAs, stocks, okay, because of things that were coming up unexpected,
Okay.
right?
Yep.
Whether it be medical, financial, or otherwise. And they needed to maintain the maintenance on the property, pay the property taxes, and leave that money in their assets.
Okay.
Okay.
Yep.
So what he asked me to do is put together a scenario for them to see if we could help offset those expenses and put some money back into the retirement plans.
Gotcha. And that worked for them.
It was perfect for them.
Wow.
They received over $200,000 at closing and $167,000 initial line of credit. And their house was free and clear.
Yeah.
And this is a way that they leveraged their asset, right?
Right.
To create income.
Yeah.
Long-term
Because
income.
again, once you have a reverse mortgage, you don't have a mortgage payment.
Right. You don't have a mortgage. There's a mortgage, but no mortgage payment. It's not due until you sell or until you die.
Wow. Is there any question that you usually get that I'm not asking you right now that can really help people?
I'm trying to think. I mean, we really covered a lot of it.
Yeah.
Oh, here's a big one.
Okay.
All right. So all the income that they receive, people think that you have to claim on your taxes.
I remember. Okay, go ahead.
Okay.
Yep.
Everything you receive through the reverse mortgage proceeds is tax free. It doesn't affect your Social Security income, doesn't affect disability, doesn't affect anything.
Yeah.
That is your money.
Wow. That's huge. That's huge, especially as you get older.
Yeah.
That's amazing. Well, look, again, this could apply to the listener. It might not apply to the listener, but if they want to find out more information about reverse mortgages and their own, to match it to their specific financial situation, how can people make contact with you?
Sure. Anybody can contact me on my direct line, which is 443-807-8144.
Okay.
I've had that phone number for probably 20 years.
Okay.
All right. And then you can reach me in my email at gdenikos@alliedfirst.com. So that's GDENIKOS@alliedfirst.com. And I'm on Facebook too.
You're on Facebook?
Yeah.
Are you on the Instagram?
I think I'm on Instagram too.
You think? Yeah. Well, that doesn't sound too darn confident.
Wait a minute. Let me see.
Are you on?
Do I have an app?
Are you on
Yes.
TikTok, Snapchat, Twitter?
No, I'm on Instagram.
Well, we are. Come on now. You got to get with it, George. Come on now. No, this has been awesome. I think it's a lot of great information. And again, if you think that this might be something that could apply to you and you want more information or answers to questions that fit your specific scenario, reach out to George, a wealth of information, a great guy. And thank you for coming on the podcast today. I really appreciate it.
Hey, I appreciate the invite, Tim. Thanks, man.
Yeah, absolutely. Look, if you're not following us yet, you can follow us on Facebook and Instagram at the Markland Advantage. You can follow us on TikTok and Twitter at TMA Real Estate. I believe we're on Snapchat. We are on Snapchat as well. But I don't know if the 62-year-old or higher is on Snapchat. So
You'd be surprised.
You'd be surprised. Yeah, that's true. There's that generation is definitely on Facebook because you got to keep contact with what the grandkids are doing, right?
Yes.
Yeah. So, but follow us there. If you feel like this podcast has given you value, or if it can give somebody else value, please share it. Subscribe to us on YouTube. Just search the TMA Connection on YouTube, and we got all of our stuff up there as well. Are you subscribed?
I'm subscribed.
He is subscribed. That's phenomenal.
I'm a subscriber.
All right, man. Well, hey, George, again, thank you, brother, for coming in.
Thank you, sir.
I really appreciate it. Until next time, live your life to the fullest, and we'll see you soon. Take care.